So they are created for providing credit at very low interest rates to the members and to the general public. So you may have in Kashmir J&K State Cooperative Bank. So it's a cooperative society. It's a credit cooperative society specifically created for providing credit at very low rates of interest to the members and to the society. And like commercial bank, these cooperative banks are also under the supervision of the central bank. Then the fourth one is specialized bank. Specialized banks are the special banks which have been created for a specific purpose to specific industry. For example, we have IDBI, Industrial Development Bank of India. It was created for providing loans, for providing credits to small entrepreneurs so they can establish micro, small, medium and cottage industries. So simply the main purpose or the sole purpose of this bank is a specialized feature, specialized function that it will provide credit, but not to common people for their consumption, no, for the industrial development so that they can establish their industrial units. Then we have NABARD, National Bank of Agricultural and Rural Development. Again, a specialized bank. It was created for agricultural and rural development. So it is not created for urban areas. No, it is created for rural areas where agriculture can be helped, where industrial development can be helped, and it will provide credit to farmers. It will provide credit to small industrial enterprises, entrepreneurs, so that they can develop these rural areas. So you have commercial bank, you have central bank, you have cooperative bank, and then you have specialized bank. These are the four types of banks that we have to understand. So this finishes up the first type of services, that is banking. The second type of service that we have to discuss is insurance. As we deal or have heard this term time and again in our daily lives, when we purchase a car, we get it insured. We have our house, we get it insured. But what is the purpose of insurance? The main purpose is to reduce the risk or to dissipate the risk among others. So what do we mean by this reduction of risk and dissipating of risk or distribution of risk among others? Simply, if there are 10 people who have taken up insurance and everybody is depositing money with the insurance company, and God forbid, out of these people, 3 suffer damages, so they will be compensated for the loss. So these 3 people, after having suffered damages, their 7 people will compensate their loss, or their loss will be compensated from the deposits that they have made. So the loss these 3 people have suffered was distributed among all other people who have deposited their deposits within the insurance company. So that is what we mean by dissipation of risk or the distribution of risk to others. So insurance is an instrument which will distribute the loss of one to others. So it's not my risk now, wholly and solely. It is collective risk of all other people who have deposited money into the insurance company. So this was just a layman or the just general idea of what insurance is. But if we get a bit technical about this insurance, insurance primarily is a contract between insurer and insured for indemnifying the loss in consideration of the premium paid annually or otherwise. So there are different parts that we have to understand. First, it's a contract. So any time or any given type of insurance will always be a contract. And we know for contract there has to be two parties. And in this case there are also two parties. One is insurer and one other one is insured. Insurer is the one who will offer the contract, who will offer to secure the risk, who will offer to compensate the loss. And insured is the one who will accept this contract, who will take up the insurance and who will try to minimize his loss, his risk of damages. So it's a contract between insurer and insured for indemnifying the loss. Probably the most important word used in this definition is to indemnify the loss. When we say in simpler terms, we can say compensate the loss. Whatever the loss, whatever the damages have occurred, the insurer will compensate the loss, will indemnify him. But it is not for free. In consideration of the premium. So when we say in consideration, we can say in return of an amount called premium. So the insured has to pay some consideration for insurer to provide that insurance cover, to provide that insurance contract. So this consideration, if not there, this contract will not be complete and insurer may not provide the binding contract to the insured. So consideration of something in the form of premium, and premium we say is simply monetary consideration. Something we pay in terms of money, and that is paid either annually or otherwise. It can be biannually, it can be half yearly or something. So again we will repeat that insurance is a contract between insurer and insured for indemnifying the loss. So again, the purpose of insurance is to indemnify the loss, to compensate the damages in consideration, in return, where insured gives something to the insurer, and that something is called premium. Otherwise, why would insurer provide him some protection if he is not getting something from the insured? So there is a consideration, and it can be either annually or any other time period that has been set. So a few terms that we have to understand as far as we have to discuss insurance. First one is insurer. When we say insurer, we said again that it is the firm which offers the insurance policy and accepts to pay the loss. So insurer is the firm or the party which will offer the insurance policy, which will offer the contract to the other party and telling him that I will take up your risk, I will indemnify your loss, I will compensate your damages. Second is insured. Insured is the one who will accept this policy, who will take up this policy. To protect himself from the risk. So whatever may be the risk, so insurer provides you the contract, and anyone who will provide the contract of indemnity, it becomes insurer. And one who accepts the contract and tells the insurer that yes, I would like to take up the policy so that I am protected from the risk, so that becomes insured. So if you buy a car and you go to LIC or National Insurance or All India Insurance, so you go there and you tell them I would like to take up insurance for my car. So they will provide you the protection, they are the insurer. You will accept the policy for your car, you are insured. And then premium. It is the amount that insured pays to insurer for taking up the insurance policy. So without this premium, this policy will not stand to be accepted. Then we have insurance policy. It's a contract, like we said, between two parties. So what does contract have? It has terms and conditions. When can this insurance be ratified? What is the amount that they will pay? What is the amount of compensation that will pay? When this insurance will be expired? When it can be converted? So on and so forth. So all the conditions that this contract has will be in the form of insurance policy. And this insurance policy is offered by the insurer and accepted by insured. And the premium is paid by insured to the insured. Then we have insurable amount. When we say insurable amount, it is the total value of the insurance policy, or we can say the maximum amount of damages which can be paid. So insurable amount will tell us what is the total value of the policy, or up to what limit the insurer will compensate the damages. And then we have compensation. So compensation is paid for the amount of damages that have occurred. A simple example will serve that, for example, a car insurance is purchased and the car insurance is worth rupees 5 lakh. So the total value of the policy, or the insurable amount that insured has taken up, is 5 lakh. So the insurer will compensate the damages up to the maximum limit of 5 lakh. But let's suppose after 2 to 3 years, the car suffered a damage of 1 lakh. Its bumper got busted, its headlight got busted. So the damages are 1 lakh. So you don't require whole 5 lakh. All you require is 1 lakh so that you may replace the bumper and the headlight of the car. So this is insurable amount. But the damages are up to 1 lakh. So they will compensate. And this 1 lakh shall become the compensation of the insurance policy for the damages. So these were all the different parts of the insurance that we have to understand. So again, we may repeat it, that it's a contract between insurer and insured to indemnify the loss. So now we can tweak the definition a bit. So we can say it is a contract of indemnity and what do we mean by indemnity? That we will discuss inshallah in the principles of insurance, where we will discuss all the principles including what do we mean by indemnity. And this shall be all for today. Inshallah, I will see you in the next lecture where we shall discuss the principles and different types of insurance. Till then, have a good day. Fi amanullah.